You have to be dedicated to it. You're not going to do this on a whim and just make money. In a bull market, sure, but it's not always a bull market.
Welcome back, everyone. Today we're sitting down with Jason Shapiro, one of the market wizards from Jack Schwager's most recent book. Someone who's really had a big experience in trading, also like a big track record, who was verified from Jack Schwager and everything around. So Jason, how's it going today? Welcome to the channel.
All good. Thank you.
Awesome. Good to have you here and good to talk. You, I believe, one of the first market wizards I talked to. I love the book. I'm sure you love the books as well. I read a new bio before that you read all these books from Jack Schwager. So we'll talk about your story, how you went to trading, some tips for people on how they can kind of strive, become better traders. So maybe give us a bit of background about yourself and kind of what you do these days.
I'm 55. I started trading when I was about 22. I lived in Hong Kong, started out there, and just kind of kept doing it and kept learning lessons and kept losing money and kept trying to get better and, still trying to get better, always trying to improve. Over time, I sort of developed a process and a discipline for how I trade. And over time, I learned that those were really the most important things about trading, just process and discipline. And I try very hard to stick to both of those things over time. And I've worked at a number of places, different prop shops, different hedge funds, had my own hedge fund. And that's what I currently do now. I manage money for 4 institutional clients. I run a CTA, so I'm a futures trader. And I offer, a process that's, I think, a little different than what most people do, which ends up creating a different return stream than what most people provide. So therefore, that's really why my clients want me to manage money for them, is I offer them sort of zero to negatively correlated return stream to most of what they have in their portfolio.
So I want to go back to why you started trading. So how did that kind of come about? How did you come across trading in the first place? And how did you kind of begin trading then?
I think I was always sort of interested in the market like other people. I went to, I was an undergrad business student. So obviously you sort of gravitate towards the market a lot. Didn't know really what that meant. But when I was in college, I started reading, a lot of books, sort of the classic books that you would go through when you first start, Graham and Dodd, value investing, that type of thing, it made sense. Warren Buffett, hey, that makes sense to me, right? When I had my first real job, which was in Hong Kong, I was working for a commercial bank there, and I was like in their little executive development program. And it was really not for me. It was a little boring for me. It was more of a, lifelong career path type of thing, follow and climb the ladder and all that. And that wasn't really for me. At the time, Hong Kong, we're looking at like 1991, 1992. Hong Kong market started to go into sort of this bull phase because everybody was piling in because of China was opening up and this whole thing. And so it was just an exciting time to sort of get involved. So I started trading while I worked at the bank. I just opened up, a personal account and got myself a broker and started trading Hang Seng Index futures and stuff. And it just kind of went from there.
Do you feel like the Hang Seng Index is similar to what we see in the US or in the biggest market, or is it a different game, a different thing to trade?
It's all the same. I think it's all the same, and I went through, I was 22 or whatever at the time, and it was a massive bull market. And I went through what I think most people go through, which is that it was a massive bull market. And I made much more money than I should have given my knowledge base. And I think also what most people go through, I ended up going ahead and giving that back as soon as the bull market ended, right? So that's it's a good lesson for people to learn. You have to make the choice at that point, right? Do I want to continue doing this, or do I want to just stop? And I think if you want to continue, then you really have to take the time to learn how to actually do this. It's one of the worst things to happen to people to make money when they first start trading. It feels like the best thing to happen, obviously. But to me, it's actually one of the worst things to happen because all of a sudden I went through the same exact thing. I figure I'm 22 years old. Hey, look at the money I just made. Give me till I'm 30 and I'm George Soros, right? Which clearly didn't happen and is never the case, So you learn as you go.
How did that period go? Did you know you wanted to go back in trading right away, or did you have to take time to kind of think about it a little bit, kind of consider a little bit more where you were going to go after? And then go back in the market? How did that turn out?
No, at that point I was all in. Wow. I knew that that's what I wanted to do. And at that point I had left the bank I was working for and started working in the securities industry. So I wasn't going anywhere. That was what I wanted to do. And it took me a long time, truthfully. I mean, I had a job, so I was getting paid okay. Um, but it took me a long time to really establish myself in the business of trading.
So how did you become then a profitable trader? You had to kind of meet people to learn how to trade, or did you do it all by yourself? How did that go?
I started taking it a lot more seriously. I started observing the markets. I started writing a journal down, what kind of trades work, what kinds of trades don't work, um, reading, listening, researching, and experimenting, you know, and slowly sort of built a process that I thought worked. And even once I had the process, then I slowly had to develop the mindset to be disciplined to that process, right? And like I say, the easiest way to do that is to lose money, lose money on trades where you're not disciplined, and slowly it chips into you. Like, why am I doing these trades where I'm not being disciplined if I'm losing money?
It's definitely a tough period to go through, and it's something you got to do. Like you got to be honest with yourself. You got to figure out what works, what doesn't work, then kind of cut that stuff that doesn't work for sure. Now, how did you transition from trading on the Hang Seng to then trading on the U.S. market?
Well, I left Hong Kong. I went to business school for a year in London. And then I came out and was trying to figure out what to do. Now, I had made a bunch of money when I was in London trading the markets. So I didn't have to do anything. What I ended up doing was moving to Thailand and sitting there on the beach of Phuket and trading. And again, thinking I was the smartest guy in the world. Look at me, everybody's working and I'm sitting here with my toes in the Andaman Sea, and I'm trading from my house and I'm the smartest guy in the world. And that took about 8 months before I blew all that money out. So from there, I really kind of had to make a decision, because at this point I was now out of money and I was married and my wife was pregnant, and I really had to figure out what the hell, if I really wanted to do this right. That's what I did. I went through all my notes and I went through all the things I've learned. And this is really when I started to develop a process. And then I just slowly kind of got back into it. I went, back to the States and got a job working at a prop shop that was paying me, I don't know, it was like $40,000 a year in salary or whatever, and then a piece of what I made. And $40,000 a year is certainly not a lot of money when you're sitting with a wife and a baby, but and slowly worked my way and slowly sort of started to make money, and slowly started to develop a reputation, and slowly met people, and just kind of, eventually got a job at a nice hedge fund and did well there, and built a reputation. It took a long time.
So that's one of the big misconceptions I see with like new traders and people getting in the market like that are pretty new to it, is they think that once you make it, you make it forever and you'll be successful like forever after. But there's like plenty of times where you kind of fell back a little bit. You had to work on some things more to then go back on track. So I think that's something that people don't really get from the start, but they definitely have to learn that over time.
I think that this is one of the hardest things to do in the world. And if you think that you're just going to have success right off the bat and that it's just going to continue that way, then you're going to learn the lesson that you have to learn, and do you really want to do this? That's when it will test you, if you really want to do it. There were situations where, I was like 30 something years old, and I didn't have $1,000 in my bank account, and I could have gotten jobs. I had friends that had worked for, at this point, the big brokerage houses, and I could have gone and gotten a job as a salesman or whatever, working there. And I didn't do it because I wanted to trade, I just kept pushing. I kept trying to meet people. And eventually I met some good people that helped me and believed in me. And slowly we built it up. But yeah, it's just like anything else, right? You have to really want to do it. With this, you have to really, really want to do it, because this is, to this day, this is the hardest thing that you can do.
What do you think kept you going in trading? Was it the passion of reading the market? Was it like seeing how you could improve yourself in trading, or what was the motivating part in the trading aspect that kept you going?
I love the idea that if you could actually make this happen, that you really didn't have to theoretically get a job, so to speak. You know what I mean? Sit at a desk all day and collect your salary and all that, because I was horrible. I'm a horrible worker. and I'm a horrible employee. You know what I mean? So bosses don't like me, and I don't listen to what people say. And, I was always getting fired. And, so that was, my life was never going to work that way unless I kind of stopped being me and just sucked it up so that I could get salary. And I didn't, quite frankly, want to do that. So I liked that aspect of trading. I had this dream going way back that I could work out of my house, not have to commute, not have to work for anybody else, and just manage money and trade for a living. And that was my dream at 20 or 23 years old. I'm now 55, or I will be in a few days. And now I do that, and that's all great. But I mean, you're talking about a 30-year journey of hell, to get there. Right. But that was kind of what I liked about it. Plus, I felt like I understood the necessary psychology to what it took to trade. It kind of made sense to me, very contrarian. You have to be very contrarian and all that type of stuff. And I've always been that way. So that kind of psychology made sense to me. And I also like the fact that there's no arguing in this stuff, right? I always say, like, you can go to a party. I'm the guy at the party when everybody is talking about, let's say, a movie, right? And how great it was. I'm the guy sitting there saying it sucked, right? And you can't win that argument. If you have, 50 people saying that the movie's great and you're the only guy saying that it sucked, then you're the loser, right? Whereas in the market, it's not like that. Everyone in the world can be saying the market's going down and you can say it's going up, and there's no argument. Either it goes down or if it goes up. You can argue all you want, right? But it's not about winning the argument. It's about, did you get it right and make money, right? So that really kind of appealed to me. And I needed that based on my personality and all that. I need to be in a place like that. I'm not going to win any popularity contests. So, and the good thing is that that's what works in the market. You want to be popular in the market, you're not going to make money. So
I think that's good advice. And I think a lot of traders are focusing too much on like copying what other people are doing. They want to follow like what the other guys who are profitable are doing. And instead of like being on their own and doing their own thing. And I think that's kind of a mistake sometimes.
yeah, I mean, it's human nature. People want to be part of a group, you know what I mean? And all that. And for whatever reason that my mom or my psychiatrist could get into deeper than I could, I've never felt comfortable there. I've never felt comfortable with the group. I'm talking about not just trading. I'm talking about since I was a young kid, I never felt comfortable in the group. I never understood it. And to this day, I kind of understand it now because I've read a lot about it, but I just don't get why you would want to be identifying with a group. Wouldn't you rather just identify as an individual? So that's a whole nother deeper conversation, but fortunately it plays out well in trading. So that's one of the main reasons why I'm here.
I was told that you almost retired from trading, but you went back in the market around COVID. Why was that? Why did you get back to trading like so intensively?
So at one point I was managing a pretty large firm and I had a bunch of people working for me. I left this hedge fund and did that because the opportunity was there. People were offering me a lot of money to leave and start my own thing. And that was sort of the big dream, so to speak. And I found that that was not the big dream because I spent a hell of a lot more time managing people than I did managing money. And that wasn't what I wanted to do. And then I got divorced and I just kind of backed off and was like, I need to maybe rethink about what I'm doing. At the time I was, 40 something, entering my 40s, maybe mid 40s, somewhere around there. And I just kind of backed off and was like, I need to take a little bit of time off and sort of get my head back on straight and figure out what's going on. So I did that. I kind of moved to a farm and all that for about a year and a half. Chopped wood and did all that kind of stuff and went all thorough, as they say. And then I came to the conclusion that I really wanted to get back into it because I missed it. I was having a good time and I had met a new woman who I was in love with and I was having a great life, but there was like this hole somewhere in there. I felt like at the time, like I was going through like a midlife crisis or something. When I was like 45, I'm like, this must be midlife crisis. Like I can't put my finger on what's going on inside of me that's missing. And truthfully, it came down to I love to trade the markets. And so I went and started trading again. And that was about, 6 years ago or something like that, 6-7 years ago.
Easy to go back in the market straight away, or some people might say you kind of lose your touch over time. You got to like learn again some parts. Did you go back like so easily, or did you have a time where you had to kind of relearn some things about the market?
No, I just started doing, I was always following it anyway, but no, I just went back. And actually, I tell you, since I've come back, the last 6 years have been the best 6 years of returns, in particular return to risk, that I've ever had. And I think it's because of that year to year and a half that I took off and kind of cleared my mind. I hadn't taken off a day in the market in 25 years, right? So I think clearing my mind really helped in that, especially on the discipline side. Yeah, since I've come back, it's been really my best run. So, knock wood, hopefully that continues.
You're trading manually, or is it running systems that kind of trade automatically?
No, I trade manually. I mean, I run a process that is theoretically semi-systematic. I put it this way: I can't make any trades, or I don't make any trades that my system says not to make. But I will sometimes not take trades that the system says to make. So it's like a system, but it's got discretion over it. But it doesn't like automatically fill or anything like that. I look at it, oh, this thing's saying buy this or sell this, and I go on the machine and I just buy or sell it.
I think it could be helpful if you explain for some people about the difference between like a trade setup and a trading system. Like, what's the difference between both? Is it the same, or are there some differences?
Well, my system is theoretically supposed to catch what it is that I'm doing, right? So it will systematically tell me, hey, this thing's a buy. But what I've learned, at least I like to think I've learned, is that there are some weaknesses within my system. And I kind of feel like maybe I know what some of those weaknesses are. So therefore, when the system might say buy this thing, I might be like, well, this is falling victim to one of these weaknesses that I'm seeing here. So I'm not going to take these trades. And sometimes I wish that I did. Sometimes I'm glad that I didn't. And that's because a lot of times things are random anyway. You know what I mean? So, things go up and down. That doesn't necessarily mean you made the right or wrong choice, right? It's about making the right choice, which is a risk reward thing, right? Doesn't necessarily always give you a positive outcome, and making the wrong choice doesn't always give you a negative outcome, right? But over time, making the right choice from a risk reward basis will give you a positive outcome over time.
People are going to want to know for sure about your trading style. Like, what are some things you look at in the market? Is it like always one specific thing, or does it vary based on the market? What's kind of like your trading style overall?
I trade one process across as many markets as I can. So I'm a futures trader. I trade all the US futures markets that have liquidity. So there's about 37 markets that I trade across. And I trade one process across all those markets. So I look at it kind of like I'm counting cards on 37 different tables, and when the one table is showing a high card count, then that's where I'm going to make my bets, right? So it's one process. And really what I'm trying to do at the core of it, there's a little bit more to it than this, but at the core of it, I'm basically trying to be long what everybody is short, and I'm trying to be short what everybody is long. I'm trying to make a market to the crowd. If they all want to be short, then I'll be long. And if they all want to be long, I'll be short. Because if you really think about it, the crowd loses money over time. So I'm not trying to be the smartest guy out there. Because first of all, I'm not. And second of all, I don't think it exists. And third of all, even if it did exist, I don't think it would help you make money in the market. But I'm just trying to find the people that lose money and make the money that they're losing over time. It's really all I'm trying to do. To me, it's very, very simple. Why make it more difficult than it has to be?
So is it more like a reversal trading? You're looking to catch the big reversal, or is it more like just looking to go against the crowd and some small moves in the market?
Most of the time, I would say as high as 98% of the time, I am picking market turns. Yeah, I'm picking bottoms and tops because that's when the most pronounced participation is going on by the crowds. They're panicking at the lows and they're freaking out at the tops.
Interesting. Now, you're one of the rare traders I see doing this. That's quite interesting to hear. And you do this intraday, or you do this like on a higher time frame?
No, it's on a much longer time frame. I'm picking sort of major market turns. Usually these trades last 3 to 6 months.
Wow. Yeah.
I have had trades I have had trades last a lot longer than that. I've had trades last almost up to 2 years, but it's not really up to me. It's up to them. Like if they're all short and I buy and it starts going my way, it's going up now. I won't get out until they start getting out of those shorts. So it's up to them. Usually it takes them about 3-4 months. But if they're going to sit short for 2 years, and I'm going to sit long for 2 years,
Interesting. So you're going to look at the market to decide when to exit. It's not based on like a fixed target at some point. It's based on really when the market starts to go against you, then you'll get out.
This is all again, up to them. It's not up to me. If I'm buying because they're all short, then I'm getting out when they get out of those shorts. That's the process that I'm using, and that's the edge that I'm trying to get. So that's what I use to get both in and out.
Now, I'll be curious to know, like, what's your daily routine to be able to manage that? Because you look at multiple markets, that's probably a lot of work. At the same time, it's on a higher time frame scale. So how much time is trading involved in a day to day? What do you spend time on? What's the most important thing you do daily? And kind of how that all plays out.
I mean, first of all, I have data, right, that downloads. So, and that goes into my system. So my system tells me like what markets are showing what I'm looking for, right? So this is what it could be. I'll give you what it could be, and then I'll give you what it actually is, right? So what it could be is, okay, so here's the markets that have possible trade. So I have to start focusing on those markets, right? What's driving that, right? Here, I want to get whatever, short wheat. Why do I want to get short wheat? Well, because everybody's long. Okay, well, why are they all long? What's driving it, right? Well, because whatever, there's a war going on between Russia and Ukraine, and therefore people are expecting that Ukraine's not going to be export wheat, and there's a huge heat wave going on. Therefore, everybody thinks that the wheat harvest is going to be lower than expected because it's all burning out and all that. So I start to follow those markets where there's possible trades very closely, and what's the news that's driving it, right? And that doesn't really take very long, quite frankly. But that's kind of what I'm following. And that's really all I should have to do, right? Because now I'm looking for them. I mean, my trades trigger on what I call a news failure. So again, if everyone's buying wheat for these reasons and some news comes out that supports these reasons and the wheat doesn't go up anymore, now the tape is sort of telling me, this is tape reading, right? The tape is telling me, okay, there's no one left to buy. So that's where I'm going to short it. And that all takes no time right there. What it really looks like is I sit in front of these screens all day and night. And I watch them all day and night. Now part of that is because I do use discretion on my stuff. And the biggest discretion really is on the portfolio side, right? If I have this trade on, this trade on, this trade on, this trade on, like let's say I get signals to be long Dow, S&P, NASDAQ, and Russell. Well, clearly those are all correlated, and that's the same trade 4 different times, right? So I'm not going to put all those on full size. But when it comes to cross assets, right? Let's say I'm long S&P and long gold and long silver and cotton and a whole bunch of stuff like that. I want to know sort of what those correlations are. Now, clearly you can do that by running a value at risk or something like that. But I don't do it that way because I find that that's too delayed. So I'm watching these correlations day by day and sort of following sort of what the psychology is behind those correlations. Is it because these are all driven, like right now, for example, are these all driven because of inflation expectations, which is the big talk here, and therefore, how am I going to size my different things across my portfolio based on those correlations? So I watch kind of all day and night for that matter. I mean, literally, I'm up usually around 7:30, because that's when my wife gets up to make her coffee. And then I am here in front of this all day. I have the TV on because I like to listen to what people are talking about, because I like to build a general psychology, people say, oh, you're crazy. The people on TV don't know what they're talking about. And my answer is always, that's exactly why I listen to them. The people that do know what they're talking about are not talking to me, right? If I could get George Soros or Stanley Druckenmiller to tell me every trade he's going to make, well, then my life would be easy, but I can't. So I have to listen to the people who are going to be wrong over time and go opposite, right? So, I have the TV on the background. I like to listen to what these people are saying. At the end of the day, I love to watch the post-market shows. It's one of my favorite things that there is. And again, people are like, those guys are idiots. Why would you listen to them? I'm like, that's precisely why I listen to them. Okay. So I watch the post-market shows, and then I go to sleep for about 2.5 hours or so, 3 hours. And then the Asian markets open, and I sit here and I watch that until about, 2:00 in the morning, and then I'll sleep again from 2 to 7. So I get my 7-8 hours of sleep. I just do it in 2 different phases. It's a horrible, horrible way to live, but it doesn't need to be done that way. And truthfully, I don't just sit here. A couple of years ago, for example, I said to myself, I sit here in front of these things 18 hours a day, right? Instead of just sitting at this desk getting, fat and out of shape, I could sit here and do push-ups the entire time. I could do 1,000 push-ups a day and be like the most in shape guy in the world, right? Which I'm not going to do because I'm not really into that kind of stuff, but I am into music. So I was always a drummer. I can't sit here and play drums and watch the screen, but what I can do is I had a guitar. My son had a guitar. I started playing guitar. I can sit here and play guitar in front of the screen, all day. So it kind of does both, right? And then a cool thing happened after the book came out, where a lot of people were hitting me up after that book came out on LinkedIn and places like this. Hey, can you help me learn how to trade? Can you mentor me? And you get to a point in life in your 50s, I think, where you do want to kind of help people. People have helped you, and therefore you owe it to sort of help other people. And you also start to change your view on life, that really giving back is the key. That's a whole nother philosophical conversation. But because all these people were helping me out, were hitting me up, and I can't help 300 people at the same time, right? So one of them ended up starting this web page that people get on, and we have a Discord chat. So I spent a lot of the day on the Discord chat, speaking to them about markets and speaking to them about trading, and we speak about other things too. We joke around when the markets are slow and we have fun, but that's become another place to kind of spend my time. So like that's on my computer while I'm watching the markets, but it's also giving me sort of something else to do while it's all going on.
I love that. That's a crazy routine, but I totally understand when you have a passion for the market, like that's really what you really want to do, then that makes sense to do it. So
it's a crazy life, and it's a crazy routine. Yes, I have sat in front of these screens. Sometimes I see things and people are like, man, how did you see that? I'll go, because I've sat in front of these, I've been watching these things 18 hours a day for 30 years. You know what I mean? Sometimes you pick things up,
Also, when you think about it, like the average trader watching the charts maybe like 2 hours a day, 3 hours a day. Like even for myself, I don't watch a chart that often, that long, but I watch them a couple of times a day for sure. But there's probably things you pick up by watching the charts a lot, by going through the price action, the data on the chart. Like there are probably some commonalities and things you pick up that you wouldn't pick up if you just look at the chart like an hour a day or something.
I would think so. Although probably doing an hour a day probably makes it a lot better, but your return on time is probably a lot better if you can make money doing it that way. I always talk about this trade that I made. It was in that book, but I got long because I was looking at the charts, and I got the long the Hang Seng Index, and I thought that I thought it was going to go up, for a number of different reasons. I thought it was going to go up. So I bought a bunch. And then I went away to Africa for 4 weeks. And this was pre-cell phones kind of and pre-internet really. So there was nothing I can do. I told my broker, look, if it goes down here, then stop me out. Otherwise, I'll call you in a month, right? So I didn't look at a chart for a month. I didn't even know what was going on in the world for a month. And I came back, and lo and behold, the market had gone up a whole bunch, and I made a whole bunch of money. I didn't look at a chart once, right? So it's probably the better way to do it. This is just, I don't know, it's habit, this is old habit. And like I say, it's important for me to be, because of the correlation in the portfolio and whatnot. I really need to pay attention to that.
Yeah, you used to have a big job when you manage a fund to be able to make sure the risk is not too high on some things and that you don't like overexpose yourself for sure. So do you feel like the big events we have these days, like the war in Ukraine, the COVID thing that happened before, do you feel like those add more risk to your portfolio, or do they kind of not really add any risk to it?
I think there's always something. You know what I mean? There's always something. You know what I mean? Well, okay, we haven't had a war in Ukraine before, but I don't know, since I was born, I've been hearing about the Middle East and how it was going to blow up the world. And then we had North Korea was going to blow up the world. And, the whole Russian American thing before that, the Cold War thing, now it's inflation, before it was deflation, recession. It's always something, it's always something. So I don't really think that changes. I mean, sure, volatility picks up on the day of, Russia invading Ukraine or whatever. But I feel like there's always something going on. So I guess the short answer is no, I don't think it changes.
Now, I do want to talk about the Market Wizard book that you were featured in, and being featured in one of the Market Wizards is like a big thing. So all the guys watching the interviews are going to know what Market Wizards is for sure. They've all read it for sure. So tell me, what was that like to be approached to be in the Market Wizards book? How did that go, and how did you kind of feel about it?
It's funny because the first book that I ever read about trading, and I read it the first day that I put on a trade on the Hang Seng Index. I had no idea what I was doing. I went to the bookstore, and there was a book that looked kind of cool. I bought it. I read it that night. I thought it was the coolest thing in the world, and it really set me down my path of trading, right? So when you're like that and you're 22, your dream is to be a market wizard. Hey, I want to be in Market Wizards, right? But when he approached me, I really didn't want to be in it anymore, and I told him that. More to the point that I'm not looking to raise money. You know what I mean? I manage all the money that I want to manage. I have the clients that I want to have. So I didn't need to do it from a marketing perspective or anything like that. I also sort of have that superstitious feeling that once you subject yourself to that kind of press, then you're digging your own grave. You know what I mean? I don't know if you ever read Victor Niederhoffer's first book, but I thought that one of the messages that Victor Niederhoffer was giving in his first book is that if you write a book, you're about to blow out, right? And he did write a book and he did blow out, right? So he proved his own point, right? And so it's not really important to me to get fame or to get notoriety. I don't care if anybody knows me. All I want to do is make money in the markets. That's what I want to do, right? So I was kind of against it. And I talked to Jack about that, and he just kind of kept coming back to me. And he was like, well, I mean, Bruce Kovner was in my book. That didn't do any bad things for him. You know, Paul Tudor Jones was in my book. It didn't do anything bad for him. So, you know. So, and then I talked to some friends and they were like, just go for it. Stop being such a wimp. So I did. So I agreed to do it. And look, it ended up, I tell you what, first of all, my P&L did top for about 5 months the day the book came out. So I was right about that. Hooray for me. Right. And lost money. But it turned out it ended up doing some good things. This whole webpage thing and all that has been really enjoyable. And that really came a lot from that. I don't think anybody would be interested in getting on my webpage if I wasn't in Market Wizards. That's where most of the people came from. They read the book. They liked what I was talking about. They search for me. They see my webpage. They get on there. So yeah, that's a good thing that's come out of it. So it's fun. I guess it's fun.
Yeah, and it's definitely a big thing because like there's not 1,000 Market Wizards anyway. There's only a few of them, and you're part of them too now. So that's amazing. And also it shows credibility because like all your track record, I'm sure you had to submit them to Jack, and then they had to check this out and make sure that you are redoing what you were doing in the past. So that's definitely a big thing. So I mean that's a big accomplishment for you, of course.
Yeah, thanks. Yeah, I mean it was nice. Jack's a good guy, and those books were always my favorite. So the first 3 Market Wizards books I think are phenomenal. I mean, they're all good, but the first 3 for me were phenomenal. Really helped me to sort of really believe that this could be done and think about how to do it.
So what would you tell people who want to succeed in trading but can't seem to get profitable, or they keep blowing up account? Like what do they have to focus on to get out on the right side and start to make some profits in the market?
Process, discipline, and honesty. You have to, and not thinking that it's just an easy thing to do. You have to understand 98% of the people or some number like that lose money doing this. So how are you going to become that 2%, right? And I know everyone thinks, oh, because I'm the smartest guy there is. Well, A, you're not. And B, even if you were, that's not enough. You really have to think about how you're going to get an edge. And once you get that edge, how you're going to be disciplined enough to take advantage of that edge. That's really the game. You're not going to get in there and get on a bunch of whatever Reddit pages and everyone's saying buy this, and so you're going to buy it. You know what I mean? You're not going to get in there and start trading Fibonacci numbers. You know what I mean? And all this and make money. It's not going to happen. 1 million people have tried it and 1 million people have failed. So you have to be very honest about the whole thing, and it has to be, you have to be dedicated to it. You're not going to do this on a whim and just make money. In a bull market, sure, but it's not always a bull market, and I don't think it's going to be a runaway bull market for a very long time anymore. So those days are gone. So if you really want to be a trader and you really want to make money, then, read the Market Wizards, read all of them. Read as much as you can. There's all kinds of great books out there. You know what I mean? I went off reading trading books because I felt like I read all the ones and all the lessons from trading books I had already read. But, I read books on human psychology, which is really all trading is, right? I have a book right here that I just bought here called Thinking in Bets by Annie Duke, who's a famous poker player. And, she talks a lot about, it's all just risk reward. There's really no difference between poker and trading, right? So it's got to be a thought process, and you have to be very disciplined and you have to be very dedicated to do this because it's very, very hard. What I always tell people is go to law school, because then you're not going to get stuck into this life of trading. You know what I mean? Go to law school, make a good living as a lawyer. And if you feel like trading, okay, take some of that extra income that you're making as a lawyer and trade the markets a little bit on the side. That's my best piece of advice. But if you're really dedicated to being a trader, then just be prepared for a very long journey.
I love that. Well, getting back to the book, the cool thing about the Market Wizards, especially, is the fact that you're not going to learn strategies, but strategies are, I think, overrated. So there's a lot more you can do, but you're going to learn like the trades of traders, the things that are common, actually the things that are not common between traders, because they all have their own style. They all do their own thing. I think that's the thing you learn the most from the books, and like the psychology behind it. What happens when you have a big loss? What happens when you blow up a big account? What happens when this and that? I think that's really valuable advice for people to learn. So definitely good advice there.
Those are the more important things. Like, and I tell people that all the time, like even the people that are joining my webpage and all that, okay, I'm going through sort of the trades that I'm doing and my process and all that. But truthfully, that's not necessarily going to work for you. You have to trade you. I have to trade me. I can hand you my system. And if you don't have the type of mind and the type of psychology that fits into that process, then it's not going to work, right? Because you're not going to stay disciplined to it and you're going to mess the whole thing up, right? You have to trade you, but the lessons across, no matter what you're doing, are the important things, right? People are like, oh, well, you don't really talk about crypto and I'm a crypto trader. I'm like, it doesn't matter what I talk about, man, because what I'm talking about, no matter what you're trading, you're going to need to have these disciplines, right? You're going to go through losing periods and you're going to need to deal with that. You're going to go through winning periods, hopefully, and you're going to need to deal with that. But you're going to need to think consistently about process, edge, discipline, and all that. And that's really the stuff that I try to push on people. Not how trade like me because, blah, blah, blah. I tell people don't trade like me, right? Trade like you, but use these lessons across it. So I think you're 100% right about that. Yes.
And since you mentioned Fibonacci, do you feel like some of these like common trading tools are kind of overrated, like Fibonacci, some other tools like you can see everywhere on like the websites and the videos? Do you feel like you have to go beyond that to really make something your own, or I think you can just use these tools and be successful?
I would answer on both sides of that, truthfully. Do I think they're overrated? Yes, I think they're 100% overrated. Do I think you can go on a website and listen to some guy talk about Fibonacci numbers and make money? No, I don't think that you can do that, right? But at the same time, I think with good discipline and good risk management, you can make money a million different ways. You know what I mean? Flip a coin. It's 50-50, right? With good risk management, you could probably make money out of that, right? When I first started trading, I sat next to this woman, Jackie Chan, who was a great trader, and she used to do that. She used to buy something and be like, here, I just bought this, deal with it. See if you can make money out of it. And then she'd turn to me and be like, here, I just shorted this, deal with it. See if you can make money out of it, right? It really, people don't believe it, but the direction of which way you're going in a market is almost the least important thing of what you're doing, right? The discipline and the risk management is much more important than that. So if you're trading because of Fibonacci, or you're trading because of Elliott Wave, or you're trading because Jason Shapiro said buy, or you're trading because some other guy said sell, that's the least important of it all. Same two people put on the same trade, one makes money, one loses money. The difference is discipline and risk management. So I don't know if that answers your questions, but I guess the answer is yes and no.
That's such a good advice. No, that definitely answers it for sure. Now, I'm just curious, how do you get out of a trade while making money, like a random trade? How can you get out of that trade and still make money? Is there any techniques or things you look at?
Yeah, I mean, like I say, I buy because everybody's short. So I get out when everybody's not short anymore. That's really all I do, right? And that's my process. And that's what I stick to. And that's what I have found has worked for me, right? It fits into the type of person I am. It fits into the psychology I have. And over time, it has, knock wood, made me money. So I stick to it for that reason more than anything, right? And I've tried to eliminate. I think that I've gone through all those things that you're talking about, trading Fibonacci, trading this, trading that, trading the other thing, right? I've gone through almost all of them. I must have read 500 books on trading in my day, right? And I slowly eliminated the ones that didn't work. If you could just eliminate the things that don't work, then you're stuck hopefully with the things that do work, right? And after 30 years, hopefully I'm getting closer to that place.
And so many good tips of advice in this interview, so I'm sure people are going to love it for sure. That's definitely awesome. I want to respect your time, so I'll make sure to link the webpage you mentioned in the link to the video, the description there. People can check it out, see what you're doing there, and connect with you, of course. Where else can they connect with you if they want to reach out or see what you're doing in trading?
So I'm on, we have this web page. We're crowded. I have to, my partner always gets mad at me, crowdedmarketreport.com, which costs a little bit of money to go on there. No, not very much. But then we also have, I also make YouTube videos, which is under Crowded Market Report. And those are clearly free because it's YouTube. So you can go on if you don't feel like paying whatever the $100 to join our thing. You can go on the YouTube. There's not as much content there. But I do make a weekly video and I talk about things like risk management and things like, like that on there quite a bit. So you can go on there too and let me know what you think. And I ask people if there's anything that you wanted to see a video about, write it in the comments, let me know. And I'll try to do one about that if I know about it. Like I'm not going to do a video on Fibonacci's and I'm not going to do a video on, on something like that. There's plenty of people doing that. You don't need me to do that, so. Plenty of people that spend a lot more time looking at that stuff than I do. So people don't need me to do that. But yeah, those are places that people can check it out and see if they like it.
Awesome. I'll make sure I'll leave them link below the video here on the podcast show notes also. People can just click those and find your websites directly and your YouTube channel also. So it's going to be easier to find there. This is really good advice. I'm really happy for this. I think people will benefit a lot from this interview. And definitely reach out to Jason if you have any questions, of course, after the interview or comment below the video for your questions. And Jason, I appreciate your time and the advice you gave here, and I'll hopefully talk to you pretty soon.